Ladies and gentlemen, kids of all ages, we are back. We are back. We had the week off last week. I kind of had a feeling that doing a show last week might not have been the best idea because A, we were insanely busy, which was kind of weird considering it seems like the vast majority of Marcellus was away for spring break. So, with that being said, hope everyone had a fantastic spring break and had a fantastic Easter because we really haven't gotten together since then. So, hope everyone had safe travels. And for those of you that did go down south, thank you for understanding your assignment and bringing some of that warm weather back up here. So that is much appreciated. So yeah, like I said, I hope everyone had a great time on spring break. And this week we're going to do the top 10 things you need to see on your home policy. And I do apologize if any uh, construction sounds come through. As you know, the whole downtown of Marcellus is being ripped up right now, so it's kind of unavoidable. I have a feeling that a lot of my filters might pick up most of it, but regardless, the content is going to be worth the distraction. I promise. I promise. But we're gonna talk top 10 things you need to see on your home policy, whether we're talking a new home purchase or this has been a policy that's been in place for years. Um, a lot of these things might not have been available years ago when you did initiate the policy, or if it's moving forward for a new purchase. Maybe if you do a little bit more digging, you might find that there's some added discounts somewhere in there. So we're going to talk about that. We're also going to I'll give an update on the $1,000 band donation challenge, which again, thank you for everyone who has reached out and either commented, got a hold of me, and have received quotes. But we are very close. So kind of keep an eye out for that as well. So without further ado, ladies and gentlemen, if you do not know me, my name is Ryan Turbo Jackson. I am your insurance resource. And in videos like this, I talk about insurance related content, whether we're discussing policies, language, because let's be honest, insurance is its own language. So let me help you. So let's jump into this top 10 things you need to see on your home policy. Number one, guaranteed replacement cost. This is a huge thing. And going back to when I opened saying that if your policy's been in place for a while, this endorsement might not have been available at the time the policy started. So make sure you get with your agent and see if that endorsement or coverage is available. Now, there are some companies that, depending on the age of the home, will not offer guaranteed replacement cost, but will offer, like some companies call it, an increased cost endorsement, or will give you up to 125% of the dwelling coverage, or even some will offer 150. So any of those three are much better than just your standard dwelling coverage, because the price of everything keeps going up, whether it's the cost of materials, the cost of labor. So make sure, I mean, that it's number one for a reason, because can be life changing if that's not on your policy, and God forbid a total loss happens. So make sure some sort of guaranteed replacement cost, increased cost endorsement, something like that is on your policy. Number two, let's talk about your roof age. We had talked about this a little bit in a previous video, but I know all the companies I work with and most of the companies out there do give discounts for newer roofs. So if you do have a newer roof, make sure you contact your agent and let them know. And also make sure you have proof, some sort of proof that the work was done and when it was completed. Because like I said, that could be a discount. That could be a discount. And fun fact too, make sure that the roof material is correct. If you have a metal roof, you want to make sure that the replacement cost on your home includes a metal roof. Because if not, and there's a total loss to the roof and it's not really rated that way, you could be going from a nice metal roof to a shingled roof, and you paid a whole lot more money for that metal roof. So make sure your agent knows about that. Number three, let's talk deductibles. We have talked about this in the past. Whether in my personal preference, I would much prefer to have a set deductible, like $1,000, $500, $2,500. There's a lot of companies moving towards percentage deductibles, where it's a percentage of the dwelling coverage, whether it's 1%, 1.5%. Those can be okay. Just make sure that you keep an eye on it. And because, like I said, I've had clients or people come to me that became clients that had, $6,000-7,000 deductibles and had no idea because the dwelling coverage kept going up and up and up, and with a percentage deductible, the deductible kept going up and up and up. So if you're cool with that, cool. If not, make sure that you are using a company that does have a set deductible. There are some companies nowadays that are, I mean, we have some policies on the books here at Abbott and Powers that still have $250 deductibles. Now those have since gone by the wayside, but if you do have one, it is grandfathered in. But even the $500 deductibles are starting to be weeded out. And there's some companies that have a minimum of $2,500. So when you're shopping around, or if you do have a policy like this in place and you're like, man, I've got a $2,500 deductible, there's no way I could come up with $2,500 if something happens. Well, maybe you need to look at a different company and get in a situation where you are more financially able to come up with that deductible. So deductibles can be huge. I've said this a handful of times on here. One of my first sales trainers told me in insurance, you pay twice. You pay up front, meaning your premium, and you pay again when something happens. And it's my job to make sure that you can afford both options. So keep that in mind. Let's go to number 4. Number 4, personal property replacement cost. Again, this kind of goes hand in hand with the replacement cost of your home. You want to make sure that your personal property, aka all your stuff. I've used the analogy before. If you were to pick your house up, rip the roof off, and dump it out, everything that dumps out would be your personal property. So it can be a headache if you don't have this coverage on your policy, because then you're talking about depreciating things, and it just makes everything way mucky. And where if you have replacement cost, they'll just cut you a check for whatever it costs to purchase said new items. Minus your deductible, of course, but it's a whole lot easier. And for the price of what this endorsement costs, it's usually pennies on the dollar. So highly recommend that. Let's go to number 5. Number 5, water and sewer backup. This is a big one. Believe it or not, water and sewer backup claims are number 2 after weather-related incidents. Now you might be saying, well, Ryan, what does that cover? Well, if there's water in your basement, it can't come from the outside, because remember, we've talked about water from the outside coming in is considered a flood. But I've had folks be like, well, Ryan, I don't have a basement, I have a crawl space, or my home is on a slab. Well, your septic or sewer can still back up. And would you want to clean up all that ickiness? I know I wouldn't. I would want some sort of water or sewer backup coverage, so I could call ServPro and be like, hey, can you clean up this nastiness? That's not really my thing. Now, if you do have this coverage in place already, one thing in talking with our ServPro rep is that when I first started in this business, we would put $5,000 worth of coverage on water backup coverage on every home policy. And that would cover the cleanup and maybe some drywall work and stuff like that, maybe some flooring. But nowadays, if there's any sort of finish, whether it's a flooring, drywall, anything like that, just the $5,000 coverage is basically covering the cleanup. So if you do have $5,000, and if you have even a little bit of finish, and like I said, this could be, this isn't just limited to a basement. It could be a main floor, and you're getting sewer nastiness coming up through the toilet, through the bathtub, any number of things. So usually when it comes to this, there's going to be some sort of finish that nasty stuff is going to attack or destroy, I guess is a better word. So think about upping that coverage to maybe $10,000. It doesn't cost a whole lot extra, and it could save you a lot of pain and stinkiness. So kind of keep that in mind too. Number 6, discounts. Everybody wants discounts, so make sure that you're maximizing all the discounts you can. We've already talked about the roof age. Um, try and bundle your policies together. Multi-policy discounts are huge. We're going to talk about in the next one, umbrellas, and most folks don't even know that adding an umbrella to their policy is a discount, depending on the company you're with. If you have younger children at home, or you yourself, life insurance is another discount. So make sure, on top of that, there's certain companies offer discounts for certain things, whether you're an alumni of a certain college, or you belong to a credit union, or you're a veteran. So make sure you're having these conversations with your agent and make sure those discounts are on there. Because I mean, it's if you qualify, you might as well take advantage of the discount. So kind of keep that in mind and make sure you're maximizing your discounts. And so yeah, like I said, the price of everything is going up, including insurance premiums. So make sure if a discount's available, ask about it. Ask about it. Number 7, I kind of alluded to it, liability coverage. When it comes to a home policy, the minimum liability coverage you can carry is 100,000. Me personally, when I do my quoting, I start at 500,000, just because 100,000, if there's ever and we've talked at great lengths about this too. Anytime you hear the word liability, think lawsuit. Liability, lawsuit. I don't know if you've been to court lately, but I have a very good feeling $100,000 is not going to get you very far. It might cover part of the lawyers. If there is a settlement, it's going to have to come out of your pocket. In the price difference between $100,000 in coverage and $500,000 is usually less than $1 a month. So keep that in mind. 5 times the liability coverage for an extra $12 to $15 a year. To me, that's a no-brainer. If you happen to live by a water exposure, whether it's a lake, a pond, a stream, a river, a swimming pool, highly recommend bumping that up to $1 million. And on top of that, I mentioned the umbrella coverage. Everyone needs an umbrella policy. Everyone does. I've had conversations just in the last week with 3 or 4 people, and I thank you, Jake Berg. Shout out to you. To use the analogy as like it's easier for me personally to write a check to my insurance company for $250 a year as opposed to trying to write $1 million check. I would much rather my insurance company write that $1 million check rather than me. So keep that in mind. And like I said, it's a discount. And going through the renewals here at Abbott and Powers, I've been sending out umbrella quotes hand over fist, and the vast majority of them, it's cheaper to have all 3 policies than 2. So again, getting back to number 6, the discounts, and number 7, liability. Liability is the cheapest coverage you can have. So that is something that I am adamant and believe in wholeheartedly that everyone needs an umbrella policy. So keep that in mind. And if you do have the 100 or 300,000 on your home policy, considering bumping that up. And like I said, it's for the price is very, very inexpensive. Number 8, let's talk about outbuildings. Now, with the standard home policy, there's 10% of whatever your dwelling is covered for. 10% is covered they take 10% of that, and that's the limit for other structures or outbuildings. Now, you might be saying to yourself, well, Ryan, I don't have any outbuildings on my property. And usually most people think of detached garages or pole barns, which are indeed outbuildings, but gazebos, any fences, anything like that it also falls under other structures other structures. But what kind of wanted me to add this to the list is if your policy has been in place for a while, and let's say 10 years ago you did build a 48 by 60 pole barn, and you say, let's just throw out a number, you paid $60,000 to have it put up. I have a feeling it's going to cost a lot more money now than it did 10 years ago to have that replaced. So your agent should be able to run a replacement cost estimator on something like that. And yes, it will cost more, but getting back to that, You pay twice, pay up front in your premium, and you pay when something happens. A little bit increased premium in the beginning will far outweigh, $20 or $30,000 gap that you could be trying to come up with out of pocket to replace that building. So if you, like I said, if your policy's been in place for a while, have that conversation with your agent. Make sure that your outbuildings are properly, they're not properly taken care of, but there's enough coverage in this market. All right, number 9, we're getting close. Scheduled items. We've talked about this too, whether it's jewelry, collections, antiques. A lot of companies will actually let us individually insure yard equipment. So if you have a fancy 0-turn mower, we can, and a lot of times too, if you do take out a loan for something like that, they want to be on the policy too. So that's it'll kill two birds with one stone. It'll help you, it'll make the lender happy, and you'll get that extra coverage too, because, well, not extra coverage, but yeah, it is extra coverage. And on top of that, we can set a different deductible. So if you have a $15,000 mower, is that considered your personal property? Sure is. If it's stolen, if you have $1,000 deductible, you got to come up with $1,000 to buy a new mower. But if we have it individually insured or scheduled, we can set a deductible as low as $0. So that could be a huge help and a huge, kind of fill that gap if something does happen. I have clients that have, like wood splitters and any number of things you can think of. Camera equipment, computers. The only thing we really can't schedule anymore is cell phones, just because that the insurance claims on cell phones went through the roof once people started doing that. So there really isn't a company anymore that'll let us individually insure or schedule cell phones anymore. So that's something we kind of used and abused, I guess. So they're like, no. And finally, number 10, do you have a good agent? Is there a good agent that signed the policy when you started it? We can talk about how good a company is, how good a policy is written, but if your agent isn't there to back you up or help you through things or guide you through the claims process, then really what are you paying for? What are you paying for? And a lot of times I've run into this too, where a client, a prospect will have a kind of a sour taste in their mouth from dealing with a company that I quoted them with. And they kind of explain the situation. And I'm not saying this is the case for everyone, but a lot of times it's how the agent handled it. It has nothing to do with the company who issued the policy or the company that is denying the claim. It's that the agent dropped the ball. So you can have the most perfect policy with the quote unquote most perfect company, but if your agent isn't there to back you up, then you're not standing strongly on both feet. So make sure that your agent is up to snuff and is willing to have the conversations of the things that we just talked about. I know on my end, in the last 2 weeks, I've had 5 or 6 folks come in, and we've went down every line by line of their policy, and I am happy to do that, because why? I want to make sure, especially an agent in a new agency, I want to get to know my clients, and B, I want to make sure that their current policies are written the best they can be written for that person's individual circumstance. So that is huge. So that is the top 10 things you need to see on your home policy. Now, let's talk about the challenge. We are winding down to our 25 quotes. Today I am sending out 22 and 23. And if I get a paper back from another person, that'll be 24 and 25. So we've done it. We have done it, or we will do it. We haven't done it because I haven't sent those 4 out yet. But fingers crossed, by the end of today, we will have reached our goal of 25. Let's give it up. So So again, thank you for everyone that has joined the challenge. Now you might be saying to yourself, well, I really wanted to get into that. Well, that's okay. We have till May 15th. So let's keep these coming. And if we get an extra 25 more, we're going to double it. We're going to double it. So the challenge doesn't stop here, folks. Yes, we will hit our goal by the end of today, but the goal has been reset. The 25 is now 50. 25 is now 50. So let's keep them going. Again, thank you for all the support. Thank you for everyone sharing this. Thank you for everyone reaching out and giving me the pleasure of quoting you. So I'm looking forward to see how many we actually get, because like I said, it's only April 9th. We have till May 15th. We have at least another month, ladies and gentlemen. So let's get these in. Let's get them going, and let's help out the band. Let's help out the band. So again, a big shout out to the Newell Agency, Brad and Jay Newell, for issuing this challenge. So let's keep it rolling, and everyone get out and enjoy the weather today. The weather yesterday was absolutely gorgeous. It's supposed to be that way again today. Later on this week, it's supposed to rain, but it's spring. That's going to happen. So yeah, let's get out and enjoy the weather. Everyone have a great week, and I will see you on the next one.